Hello and welcome to Crux Investor. We spoke earlier today to Mark Pay, who is the CEO of Arizona Metals, TSXV listed gold explorer with assets in Arizona. And if you want our take on that conversation and indeed the company itself, you can find that at cruxinvestor.com/club. We can also find detailed company reports, market commentary from experts from around the world, training videos, and also summaries of other interviews that we've done. Plus, there's a thriving community of investors sharing their thoughts and ideas with each other. And if you go there now and sign up for the waiting list, you get access to a 7-day free trial. And of course, we'd love your feedback too. So do give us a like, leave your comments below. And if you want to see what we talked about, take a look in the description below. Mark, how are you doing, sir?
Hi, good morning.
Good morning to you. Where are you?
I'm in Toronto, Canada.
Right. Nice picture in the background. I'm assuming that's the property.
Yeah, that's our K-mine in the background. That's our drill site.
Fantastic. And so how are things in Toronto? All okay? I know it's early in the morning there, so that's the first tough thing you've got to get over.
Yeah, that's right. No, it's good. We're dealing with the same problems everyone else is around the world, but it seems things are slowly improving.
And you can manage things from Toronto?
Yeah, we're lucky that we have two geologists based in the U.S. One is actually in Arizona, so he has access to the site at all times. And our VP of exploration is based in Seattle,
right.
Dave Smith. So we can really get a handle on things from here.
Fantastic. Okay, well, first time we've spoken, first time we've heard this story. So why don't you give us that 1-minute overview on Arizona Metals, please?
Yeah, Arizona Metals is a recently listed company, listed in August of 2019. We own 100% of 2 exploration projects in Arizona. The flagship asset is the K-mine. It's an hour north of Phoenix. It's a high-grade VMS copper gold deposit. Has a historic resource defined in 1982 by Exxon Minerals. It's roughly 6 million tons at 6.4% copper equivalent, primarily made up of copper and gold. Hasn't been explored in the last 40 years until we started our phase 1 drill program this January. And then the second project is the Sugarloaf Peak project. We also own 100% of that. That is 2 hours west of Phoenix, heap leach open pit target. Also has a historic resource from 1983, 1.5 million ounces of gold at 0.5. So it's lower grade, but we think good expansion potential. We've just completed a small drill program there, primarily for metallurgy. We want to show that the deposit can leach before we start spending money on making it bigger. Right now, we're focused on permitting a phase 2 program at our K-mine. It's an 11,000 meter program. We're expecting to start drilling again later this year.
Perfect. Thanks for the summary. Because we haven't spoken before, and it's you're kind of early days. I wouldn't mind just trying to understand where you guys have come from. So looking down the team, I mean, can you tell me a little bit about your history first, please?
Yeah, the company was founded by myself and Paul Reed, who's the chairman. We started the company in 2014. Prior to that, we had worked together for a number of years in the brokerage business. I was a mining research analyst and Paul was a banker. And we're primarily financing junior mining and exploration companies. In 2011, we started a company called Telegraph Gold, and we raised money to acquire assets primarily in California. And the main asset we acquired was the Castle Mountain mine, which was a past producing heap leach open pit mine that had been shut down due to low gold price, but also some legal issues. Once those issues were cleared up, we acquired it in 2011. We listed it in 2013 as Castle Mountain Mining. We stepped away from the management on the listing. We still remain shareholders, obviously, and it then became Newcastle Gold. And then last year, Newcastle Gold merged with 2 others to form Equinox Mining. And the Castle Mountain mine just went back into production this year. So once we were stepped away from that, we're looking around the same area and we came across the Sugarloaf Peak project, which is in the same Sonora Mojave Megashear. There's a string of heap leach open pit projects running from northern Mexico through Arizona into California. So we first acquired the Sugarloaf Peak project in 2016 while the company was still private. And then in 2019, we acquired the K-mine, which is also Arizona, but high grade. We're looking for higher grade projects to work on too. And then listed the company last year, started drilling it this January.
Right. Thank you. What I'm trying to get at, I'm trying to understand is what past influences affecting and driving business plans going forward. So are you looking to replicate that model? Obviously with, Telegraph and then Mountain and then, it became Newcastle, etc. Or is it something different?
Yeah, it's very similar. Our plan in the previous company was to find assets that had at least a historic resource on, that had a significant amount of work done, but hadn't been advanced either because of metal prices at the time or some other issue that we think could be overcome now. And Sugarloaf Peak fits that. It has a historic resource from 1983, hadn't been worked on in 30 years. At the time, 0.5 gram gold was too low grade at the gold prices of the time. K-Mine is very similar, has a historic resource. When Exxon had this project in 1982, it was at the metal prices of the time, the historic grade was about 4% copper equivalent, which was considered marginal in those days because the deposits close to it were running at 10% underground and 5% in the open pits. So it didn't work back then, but 40 years later, the deposits being untouched, metal prices much better. We're starting off with a decent sized resource that we think we can expand, upgrade, de-risk, do the metallurgy, do the background testing, and eventually sell it. Our goal would be to make it big enough to sell to a mid-tier company or a major company that could put it into production.
Right. Okay. So again, just sticking with lessons of the past. So how much money did you put into Telegraph Gold, and what did you guys walk away with when you listed Castle Mountain?
So we acquired the Castle Mountain project for, it was about $8 million in cash and share payments over 5 years, with $2 million in cash up front. At that time, the deposit had a historic resource of about 2 million ounces at a gram. The company raised, I think it was about $8 million in the listing, but subsequently, over the next 3 years, raised probably about $20 million and did a lot of drilling to convert that historic estimate from 2 million ounces up to, I believe it's about 4 million ounces, but also, doing updated PEAs, technical studies. So we listed the company at a valuation of, it would have been about $20 million, and it was acquired when it merged last year. It was worth about $100 million, and obviously now it's going into production. So we think there's value to be had with the projects we have by putting in the drill work to prove the resources from historic, which is just pre 4101, into 43-101 compliance, but also do the metallurgy, do the technical, do the economic studies to show it works.
Right. So again, I just want to see what you've learned, the things that you're going to apply going forward. So was that 8 million plus 20 million, or is that 20 million in total that you raised?
We raised 8 million privately.
Right.
The way the acquisition was structured, it was 8 million in cash and exploration payments over 5 years.
Right.
So it was 2 million in cash up front and then 5 million in drilling over the next 5 years.
And then you raised 20 million
I think
subsequent to that.
Yeah, after the listing, or alongside as part of the process.
Right. And then
but once it was public, we weren't involved in the management anymore. We listed it, got it up and running.
Right. I guess what I'm trying to understand is, having gone through that process, do you think you created value? I think you're saying, well, maybe we should have captured more value further down the line. And that's the lesson we're going to take and apply to this project. Or is that not the case?
I think, look, our shareholders that were involved from the beginning did very well out of that project. And many of them are the same shareholders that are in this company now for that reason. I think a lot of the value that's, as you say, we might have captured would have been more related to the gold price if we had hung on from, when we listed that project. When we acquired that project, the gold price was very low. When we listed it, maybe gold price was a lot less than it is now, obviously. But we acquired the Sugarloaf project and the K project, we think, at relatively low part of this cycle, low gold price, low copper price. So we think there's lots of value left to capture now by putting the work in through drilling.
Okay, so if I'm looking at the mining analyst that you were, what advice would you be giving yourself with regards to this project in terms of, again, lessons learned?
Well, I think the key thing is going to be to show the scale, to show how big this can be. That's what's going to drive the value.
Right.
We have to show that the K mine can be much bigger than the 6 million tons that was proven up by Exxon in 1982, but they had a very narrow focus of where their exploration was. The project is very underexplored.
Right. Okay. So now we're getting into, I think, the business plan proper. So you've got two options really: is to kind of prove up the resource or apply, limited funds to proving the scale of this. So the question is, why choose that route versus just going back and proving up the resource?
Well, at the K mine, the 6 million tons historic estimate by Exxon is defined over a strike length of 320 meters. We've just completed a phase 1 program, which was 6,700 meters and 20 holes. We hit massive sulfides on almost all 19 of the 20 holes. The 20th we actually stopped because it was a bit off target. But so we're pretty confident in the historic data based on that phase 1 program. The drilling is really confirming what Exxon reported. Now that that's done, our option, as you said, is either drill another 20,000 meters into that to prove that 6 million tons from historic into 43-101, or start expanding it. And we think because this project is so underexplored, there's real potential to make it much bigger, both on strike. So we're planning to drill now about 500 meters on strike to the north, so almost double the strike to the north, and another 300 meters on strike to the south. Those areas have never been drilled, but our geophysics, soil sampling, rock sampling is all showing, very good indication that it does expand in those directions. And then there's also 2 large targets to the west that have never been tested. So in the last 40 years, all the exploration was focused on the K mine, and most of that work was done from underground. There was very little surface drilling done. And the surface drilling that was done was focused below the workings of the K mine. So we think the real potential here to show the scale is to start testing this to the west at those untested targets and on strike. And once we've shown that there's potential, we think there's potentially multiple K-type deposits on our claims, which is typical in the region and typical for these VMS-type deposits. If we can show that, I think that shows the market that this could be a significant land package.
Right, and who are you trying to impress here? Is it the market, or have you got partners in mind? Because it's going to take some money to continue to do that strategy. You had about $8 million as of the end of June, with some warrants, potentially $3.5 million of warrants as well. I mean, that's going to take you so far. So, what do you intend to do with that by the end of next year?
Yeah, so our goal is to make this project, make the K deposit bigger, prove potential other projects, and start the de-risking process. So we've started some baseline studies showing water studies. We've also started we started a desktop metallurgy study. So we're planning the long-term metallurgical testing for the project with SRK, which will increase as we continue to get drill holes. The ultimate goal being, we're not mine builders. We want to sell this project to somebody that can build a mine. And there are a number of mid-tiers or majors, and there's the obvious targets of people that have VMS mines themselves. And, Arizona is obviously a large copper producing state. We know it's going to take work, and the key things are going to be to show the scale, but also the metallurgy. And that's what we're working on now.
See, I guess you don't know enough to be able to say whether it's a fairly homogenous asset that you've got there. So you're going to, it's basically, is it going to be, you feel sort of step and repeat and kind of move along strike, in which case that's just, quite a simple process. But what do you think you need to produce to get the interest of some of these mid-tiers to come in and, think about developing this further, or, be in a position to build out?
Well, our sort of back of the envelope DCF analysis at current metal prices, we think we need at least 10 million tons. Although, it's very high grade, it probably could be smaller, but I think 10 million tons is is the right number at this kind of grade to support a standalone operation, which we think would be a small concentrator at the site. And then the concentrate would obviously be shipped off somewhere. Exxon in 1982 thought the potential of this deposit just on strike was to expand from 6 million to 15 million tons. They weren't taking into account these two large targets to the west that are both untested. But either one we think could be as large as K itself. So I think 10 million tons is an achievable goal, but we're really trying to make it significantly bigger than that.
Right. And so how much drilling are you going to complete by the end of this year?
We're planning to start an 11,000 meter program. If we start next month, we could probably get a third of the way through it by the end of this year. But it would go into Q1 definitely.
Right. And that's been delayed because of COVID rather than anything else.
Yeah, we finished our phase 1 program this August, and that was delayed by about 2 months because of COVID. We put everything on hold. We stopped everything in March for a month, just out of precaution to put in the right kind of safety protocols, make sure everyone at site was following safety protocols, make sure everything was safe. And that also slowed us down by another month just on the permitting. So as soon as we finished the phase 1 program this August, we started the permitting. Once we had all the results back, we've also done downhole geophysics. So we had to do some analysis of that. We started the permitting process straight away. We expect to receive the drill permit in the next few weeks, which will allow us to start up hopefully November.
Okay, fine. And what are the other things that kind of hold you back during all of this? I mean, in terms of assaying, locally, is that being affected?
We did have just in the last 2 months, I'd say, we had some slowdowns. We were averaging 2 weeks to get assay results, and unfortunately, the lab had some infections and people were quarantined. So, it was probably taking us almost 2 months to get assays compared to 2 weeks prior.
Right. Okay.
But it does seem to be improving again. But the same in terms of the permitting, it's a bit slower, obviously, because the Bureau of Land Management people aren't at the office as often, and there's less people there. But it's slowed down, but it's still looking fairly smooth so far.
Okay. No, I was just checking. Sometimes when companies are talking about assays being slowed down, it's usually because there's bad results. But this is I just want to understand what's happening in Arizona and see how people are being affected. Okay. Well, the question is, I notice you kind of alternate between quoting in gold equivalent and copper equivalent, as opposed to sort of keeping it all the same. Why do you alternate between the two?
Well, the K mine it's a copper gold VMS deposit. The 6 million tons that was defined by Exxon is primarily copper gold. So the metal value in K is primarily copper gold. And if you take into account the historic recovery, so there was some preliminary metallurgy done in the 1950s, and some limited flotation testing was done in 1951, and they were getting 90% recovery of copper and 70% recovery of gold and silver. So if you take into account those numbers with the historic grades, the bulk of the metal value is going to be in copper with gold and silver as a credit. And those type of recoveries are typical of the 60 past producing mines around us. The region was primarily a copper gold VMS region. There's 60 past producing deposits, and they all averaged kind of 90 to 95% copper recoveries with 70 to 80% gold. The reason that we have some of the assays in gold equivalents is because on the southern edge of the K mine, the deposit switches from being primarily copper gold to being, it looks like a gold zinc lens. And that's typical in these VMS deposits. Above the heat source where the deposit forms, you typically get a rich copper gold zone. And then as you move distally into a cooler region of deposition, you get into more of a zinc lead or zinc precious metal zone. And that's what we're seeing. And Exxon had reported this too. At the southern edge of the deposit, they reported that they were getting into high grade sphalerite, so zinc sulfide, but they had no interest. So in many cases, they wouldn't assay it. we've drilled into that area, and we're seeing what they reported. So the copper values dropped from 3 to 5% on average down to 0.1%. So very low copper, but the zinc grades increased from 2% up to 10%. But with that, we're seeing very good gold grades, so 4 to 6 grams. So in that region, the metal value, even taking into account recoveries, is primarily in gold with the zinc credit.
Right.
So we think that's actually a very important exploration target for us, is to have, looking into that southern area, there's potentially a gold-rich zinc lens there that's much lower copper. So in some of our holes on the edge there, hole 9, 10C, and hole 15, those are reported in gold equivalents or zinc equivalents because there's very little copper. But the bulk of the 6 million tons is copper gold, so that's a copper equivalence.
Right. Okay. Do you think that kind of polymetallic element makes you more or less attractive with regards to these conversations you want to have with mid-tiers?
Well, I think this is a very typical issue that you have to deal with VMS deposits, and it's going to come down to the metallurgy. So we have initiated a desktop study now that we have 20 drill holes. We can do some thin sections. We've got started on initial, we're working on a preliminary flow sheet that we think could work, and that will feed a much scaled up metallurgy program, especially now that, we have 20 holes that we can use. We'll have another 30 at the end of the phase 2 program. So, it's going to take work, but the historic metallurgy reported, obviously 70 years ago, was good, and it was typical of the 60 deposits around us. Historically, in this area, there was very little focus on the zinc gold type deposits. So out of the 60 mines around us that were copper gold VMS producers, 95% of them were focused on the copper gold. There were, I think, 3 mines around us that were zinc gold producers, and they would have produced a zinc gold concentrate that would have been shipped somewhere out of the state. So I think those are 2 things for us to look at: defining the metallurgy on a copper gold concentrate, and then potentially on a zinc gold concentrate if we're successful with what we think is there in the southern edge, in the southern lens. Okay, so there could be more.
Yeah, no, I appreciate that. Thank you. But talk to me about sort of timing and money on this, because you've got, how much money will you have at the end of Q1 after you've hopefully finished your 11,000 meters?
Well, we have $5 million right now after completing the phase 1 program at both projects, plus the $3 million you mentioned, the warrant money. Some of that is coming in. The 11,000 meter program that we're permitting should cost about $2.5 to $3 million. So by the time we're done this program, we would be down to, call it $2.5 million, $3 million, depending on how much more warrant money comes in.
Right. Okay.
But really, if we're successful in hitting those 2 Western targets, we're going to have to scale up the program, which would be a function of successfully intercepting those targets.
Right. So talk to me about what that's going to take, because your stated aim is to prove up scale. You're not here to kind of confirm the resource you've already got. It's just like, let's talk about the potential. Let's look at what's happening on strike. And you've done some preliminary work for that. You're going to have to raise some money. And you're going to have to raise some money probably Q2, Q3, maybe. What does this look like going forward? I'm trying to understand how you, in your mind, have got this mapped out over the next 12 months. So are we looking at a little bit of dilution because the potential upside here is significant because you think you've got scale? Are you a bit more cautious? I mean, what's going on in your head?
Yeah, I think if the dilution will be driven by success. So if we can show this, we'll raise more money if there's a need to, which really means we're showing that it's getting bigger. So I mentioned we've done a helicopter VTEM survey over the claims, and that's showing the geophysics is showing good potential to extend the K mine by 2 times on strike to the north, and then also double it again to the south. So there's, the deposit is defined over 300 meters of strike, and we have 500 meters untested to the north. But there is a single drill hole from 1993 in the north, very shallow hole, was 120 meters deep. And we believe that's the starting depth of the deposit. So the K mine starts at 120. That hole was drilled only to 120, but it hit massive gold, copper, and zinc gold sulfides at only 120 meters deep. The best widths that we're seeing in the K mine are at about 300 meters deep, where we've got a nice hinge zone, 40-meter wide zone of good grades. So that's what we'll be targeting on the strike to the north. And then to the south, we've got 300 meters untested. But that's where it looks like it's switching into a zinc gold zone that Exxon had no interest in, which we believe that's why that's untested. They reported the zinc and then they wouldn't even assay it. So, the strike potential, we think, is significant expansion potential on the strike. But then we've got the two targets to the west that have never been drilled. So we've got a 500 meters west, we've got a 40-meter wide conductor that's over 600 meters of strike. Some similar. It starts right at surface, and it's got the same soil, same rock anomalies. It's on the same geological contact as the K mine, never been drilled. And then 1,000 meters west, we've got the western conductor. It's a 70-meter wide conductor right at surface, 1,000 meters of strike, also never drilled, with also same signatures as K, same soil samples, same rock samples. So if we plan to start drilling both those conductors, we think either one of those could be another K-type deposit, which, then each of those would require its own drill program. So that would, that's what would drive the need for additional capital.
Yeah, I mean, what I'm trying to get at is trying to understand is, let's say, okay, a bit forward looking. Let's say things carry on. You're kind of hitting the sorts of numbers you're hitting now. How much more time are you going to devote to this? And therefore, how much more money do you think you're going to need to raise to get it to a point where you think this is, in my view, as a ex-mining analyst and a geologist, where I can have a proper conversation with someone at a value which I think this is worth? Just using the current numbers. Let's assume it's kind of homogenous, because I want to know how long I'm in this for before you do something which might monetize my shares. Allow me to monetize my shares.
Yeah, let me estimate. So we just drilled in the phase 1 program. We had 2 drills turning. We drilled 6,700 meters, 20 holes, including the break for COVID. It took us about 4 months to drill those, call it 7,000 meters. I think if we were just to focus on the K mine, let's say we just wanted to prove up a 43-101 resource on that 6 million tons, we'd probably need about, I would estimate at a 20 to 25 meter spacing to get a measured resource, we'd need another 30,000 meters of drilling, which would cost, I would say, $10 million. But we could easily drill that within 12 months. It's just a question of how many drills do you put on it. But obviously we don't want to prove up 6 million initially, we want to prove up 10. But I think if we're doing the step outs, the market can quickly infer that this is getting much bigger without us having to put a number on it. And the same again for the central target. If we start showing similar grades and widths, I think the value will be driven up, because we're having very good continuity in the K mine drilling. If we start hitting the same kind of numbers on the central and western targets, which are within a kilometer, and it's very typical in these VMS deposits to have multiple lenses in a small radius, I think the market can quickly work out that we're making it much bigger without us having to put a resource on it. Although we eventually would want to, that could take significantly longer than just showing how much bigger it is.
Yeah. Okay. I mean, Sugarloaf, is that just a distraction? I know you're trying to say we're not a single asset risk situation here. We've got 2 assets, but are you going to spending much time and effort on that in reality?
No, we don't have anything budgeted for it right now, except for the metallurgy. So I think the eventual goal for Sugarloaf would be to spin it out. We're having there's a very different audience for that deposit. That's a heap leach open pit. It's low grade. So most of the money we've raised to date has been towards the K mine. There's a high grade copper gold crowd that's very interested in making that bigger. We're seeing now that the gold price has moved out. There is an audience for Sugarloaf, people looking for optionality. We do think there's good expansion potential at Sugarloaf. That we think you could double the 1.5 million ounces. But we don't want to start spending money doing that until we show that it can leach. We think there's no point in making it bigger unless you know that the metallurgy works. So the historic estimates of the metallurgy there were done by Kinross and Agnico in 2010. They did some bottle roll testing from surface samples and from of the RC chips. They were getting 65 to 73% recoveries. We've just completed 4 drill holes there this summer, primarily to test the metallurgy. So we believe the deposit is oxidized from surface down to about 100 meters. We've sent those top 100 meters of those holes to Kappes, Cassidy, and Reno, and they're going to be doing bottle roll and column testing. And I think it's probably going to take until Q1 of next year to get the final results back from that metallurgy. But if it matches up to the historic metallurgy, then at least we show that it leaches, it's worth making it bigger. We probably plan on spinning that out. So at least, our shareholders can retain some of that value, but we wouldn't be using our current treasury for that.
Right.
Focus
Okay.
will be on McCain line.
Makes total sense. Management have 25% of the company. How are you guys remunerating yourselves?
We get a salary, and Paul and I are paid $150,000 each, and then the bulk of our remuneration though is through options. We have options which we've had since 2015. We make money if the company is successful. So we're in this to make this much bigger, and ideally sell the company for a much higher valuation.
Yeah, it's fairly tight capital structure and G&A. Appreciate that. And you've got, there's not much of public float on this. Do you think that's part of the problem? Why? It's you've been sort of steadily rising this year, not too shabby. But do you think you need a bit more of a float out there, for people to start taking interest?
I think part of it is we've been under the radar. It's a fairly new company. We have lots of meetings recently where people have never heard of the company, and so you obviously, I think you have to get people through their due diligence phase of, asking the questions you're asking to get people comfortable. I think we'll drive the value just with additional drilling. We've been lucky. The phase 1 program was hitting on every hole. Very good indications that we can drive more value with the phase 2 program, which starting hopefully next month we'll be back up and drilling, and we should have steady news flow.
Okay, well, nice run through. Yeah, I know you sound cautiously optimistic about this. You think that you've got a few contacts. You've got our analyst coverage for a company your size, which is really surprising. You've got like 4 analysts covering you. Are you calling in some favors there?
No, we actually hadn't met any of them prior to listing the company. I think one came along, and that none of them have targets on. They've just listed us as one of their top exploration picks for the next year. Without having a 43-101 resource, it's obviously hard for an analyst to do a DCF or put on an economic analysis. But so far, they all seem to like what we have and the potential that we have.
Okay. Well, look, Mark, thanks very much for running through that story. It's new one to us as well. Like the capital structure, like your approach. Best of luck with the drilling. Let us know how you get on. Stay in touch, okay?
Yeah, definitely will do. Should start seeing some numbers before year end.